Hi, I'm Sherry Ardema, and we are going to work through Chapter 4, Exercise 5 in the book. The first thing we need to do is determine cash basis and accrual basis earnings. Down here at the bottom, I have the definitions that they had in the books. Accrual basis accounting means that transactions that changed a company's financial statements are recorded in the periods in which the events occur, even if cash was not exchanged. Where the cash basis accounting means the company records revenue only when it receives cash and an expense only when it pays cash. So we're going to go through and figure out we'll read over the problem and then figure out what we need to do. So in the first year of operations, Gomez Company recognized $28,000 in service revenue, 6,000 of which was on account and still outstanding at year end. The remaining 22,000 was received in cash from customers. The company incurred operating expenses of $15,800. Of these expenses, 12,000 were paid in cash. 3,800 was still owed on account at year end. In addition, Gomez prepaid $2,400 for insurance coverage that would not be used until the second year of operations. The first part of our question says to calculate the first year's net earnings under the cash basis of accounting and calculate the first year's net earnings under the accrual basis of accounting. So in order to do that, we need to figure out what our revenues and expenses were. So it says that they did $28,000 in service revenue, and this is the total revenue. So we'll go ahead and put that in here, 28,000. 6,000 of which was on account and still outstanding at year end. So we'll put in 6,000 in accounts receivable. The remaining 22,000 was received in cash from customers. So we'll go ahead and put that in cash revenue, 22,000. Okay, and then we incurred operating expenses of 15,800. So that will be the total year-end expenses, 15,800. Of these expenses, 12,000 were paid in cash. So that goes into our cash expenses, 12,000. 3,800 was still owed on the account by year end. So we will put that in our accounts payable, 3,800. Okay, the reason I have prepaid insurance as an additional expense is because we paid for it this year, but we are not using it this year. And the accrual basis only uses what we're using this year, where the cash basis just shows whatever cash we've spent. So we prepaid $2,400 in insurance. We'll go ahead and put that in here as an expense. And now we need to calculate which one is the cash basis and which one is the accrual basis. So to figure out the cash, we're going to use Excel to do our math for us. So we're going to hit equals, and what we're going to do is figure out our cash revenue, which here was 22,000, minus our cash expenses, which were 12,000. And we're also going to minus our prepaid insurance because we did pay that in cash this year. And that gives us a total of $7,600. So for our accrual basis, it's a little bit easier. We're going to enter our total revenue minus our total year-end expense. And that gives us $12,200. So section B asks which basis of accounting, cash or accrual, provides more useful information for decision makers. Well, if you look here, the accrual basis has a lot more information here versus the cash because it also shows our accounts receivable and our accounts payable. So the decision makers are going to want a more accurate accounting representation, which would be this accrual. In fact, in the book, it even says that the cash basis accounting is not in accordance with generally accepted accounting principles. So they are definitely looking for the accrual basis total. Thank you. If you have any questions, let me know in the discussion boards.